Today, we'll talk about crypto taxes in the UK, but from a very practical point of view. We'll discuss any recent changes in regulations, we'll see the most useful legal ways to reduce your crypto taxes, and we'll go over the process of preparing your taxes step by step, from zero to filing with an experienced crypto CPA. I'm Aga from CoinTracking, the biggest and most reliable crypto tax calculator and portfolio tracker, and my special guest is a real crypto pro. Hi, Shukry.
Hi, how are you?
Yeah, good. Thanks for being with us today. So let's just jump right into the topic. We've already discussed the whole taxation issue in the UK previously. So could you give us an update on any recent changes that happened to the regulations?
Yeah, 2023 tax year was a very interesting tax year. A lot of movement in UK around crypto taxation, governance, and regulation around money laundering compliance. I will kind of briefly summarize four key changes which may have a direct impact for crypto taxation in UK,
Mm-hmm.
and then some of the other items we looked at during the tax year. So the first one, I would like to draw the attention to the spring budget. We had two key announcements. One of the first announcement is HMRC want to introduce a new schedule to separately identify crypto assets in the tax return. Previously, we used to kind of summarize the crypto gains and income with the other asset class. So from 2024-25 tax year onward, we'll have a separate schedule to include crypto activities. What that means is HMR can clearly identify separately crypto activities, plus that will lead to any case they want to investigate if there is any potential discrepancy with whatever the data they collect. That
Mm-hmm.
will lead to some investigation. So that's the first change I would like to highlight. And the
Mm-hmm.
other one is around the capital gains allowance from the budget. They reduced to 6,000 for 2023-24 tax year, and for the subsequent tax year, it will be further reduced to £3,000. So those are the main two changes I'll see from the budget. So the reduction of the allowance is very important because many more investors will be caught into submitting tax return, because if you are a small investor and not realizing enough gain, probably you wouldn't have submitted a tax return previously. All your income might be tax absorbed, so under the PAY. Because the tax allowance has been reduced, that means you need to think about filing your taxes, even if you have done a few transactions, and if you reach the threshold, you may require to submit a tax return.
Yeah, that does sound like a big change, but does that happen in 2023 already for this year?
Yeah, the new schedule come into effect from 2024-25 tax year. The reduction will happen in 2023-24 tax year, and subsequent tax year it will be reduced to £3,000.
Okay, that makes sense. Thank you. Anything else happening?
Yes, the other movement is around the travel rule implementation come into effect from September 2023 in UK. The background for the travel rule is it's part of the counterterrorism and money laundering compliance promoted by the Financial Action Task Force. They previously agreed in 2019 that similar to the travel rule arrangement we have for the fiat currency, the regulator want to extend that to include crypto asset for the virtual asset and service providers within UK. So the UK implementation begin in September this month. What that means is basically when someone transferring any crypto asset outside of UK, together with the transaction, they had to do some enhanced due diligence regarding the virtual asset service provider. Plus, they need to do a countersign verification as well. So this will hinder a transfer outside UK. Probably the investors has to be aware of any limitation it may cause. Unless like you have been going through a verified process, you will find it difficult to transfer funds outside UK. And
yeah,
the third
so we're basically making the already complicated process even more complicated.
Yeah, so essentially it shows that it's within the radar of regulators. Crypto there's a lot of crypto usage for illicit finance and non-compliant activities. So this is why they want to strict the rules so that it will be more compliance and avoiding any tax avoidance.
Yeah, that ties in actually with what we see from our users, who also see way more scrutiny than in the previous
That's
years.
right, yeah. And the other
And
change is the crypto asset reporting framework implementation. This is again muted by the Organization Economic Cooperation and Development. They handle approximately 82% of the GDPR in the world. So it's the G20 organization mandated to OECD to kind of have a extended framework to include crypto asset in the automatic exchanges of data. Previously, for fiat currency, after the lots of offshore tax avoidance around Panama Papers and things like that, they already implemented fiat currency based reporting. So it's automatically, for example, if a UK resident have a overseas bank account in offshore territory, automatically HMRC would be receiving this detail from the tax authority in that country. So similarly, they want to include for crypto asset CARF arrangement. So what that means is the implementation will be scheduled for 2027 tax year. So there'll be annual report coming in from the local tax authority in the other sides of the world. So, for example, if you have an exchange based in, like, say, Japan or in Europe, even before you know your balance, HMRC will receive those data feed for the information.
so there's way more scrutiny worldwide, not only within UK, but also there's a lot of cooperation with international agencies and exchanges, right?
That's right. So it's as you know, like crypto is very instant and global reach. So it's not like isolated one country arrangement. Most of these items, which I explained, have a repercussion across Europe and wider world. So it's a global effort to restrict money laundering compliance and counterterrorism effort, and plus the tax avoidance.
Okay, that makes sense. So let's move maybe away from the slightly depressing
Yeah, so
topic.
I want to address one more,
Okay, sure.
key change implemented or the announced in November 2023. This is related to voluntary disclosure for any prior period undisclosed cryptocurrency gain. So in November 2023, HMRC launched a fresh campaign targeting crypto investors who haven't reported their previous tax year's liability to come forth and take a more lenient approach to settle their taxes. So this is very important. Reason why normally HMRC come up with any campaign is either they feel like there is a lack of compliance, or they have confident that they can have more enforcement through tax investigation in these areas. It's very important because, as we know, crypto is immutable. Like even after 20 years, you can still go and see the transaction because it's publicly available. Even the anonymity of the transaction come in less and less because of all the money laundering and other compliance activities. Plus, the HMRC also use AI capabilities. We know, like, they use a system called Connect. They get data feed from various sources, as I mentioned, like from the CARF and the travel rule and the banks, and exchange also provide the data feed. So they use these to kind of cross-reference their tax return and then come up with an investigation. So this is a reminder or kind of a grace period for the investors who haven't reported their prior period gain. So take these warning as serious and then come forth and then report it so that you could get more reduced penalties and bring your tax affairs up to date.
That's actually a really huge deal. I think the US is fighting for exactly that, but they're still not successful. So basically what you're saying is, when you have not declared any of your crypto before you're in your taxes, now is your time to come forward and declare them and get a more lenient approach from the HMRC, right?
That's definitely.
When does that need to happen? Is there a deadline for that?
So they generally work the tax year. Normally, current tax year, you need to file 9 months after the end of the tax year. So, for example, the tax year we are currently working on is 22-23 tax year. We need to file those by 31st January 2024 as part of the normal tax return filing. But any of the previous tax years, the deadline is already passed. So what that means is you cannot submit your normal tax return. You have to use this voluntary disclosure facility. So once you notify HMRC that you want to bring forth and correct your tax affairs, HMRC will give you 90 days for you to kind of calculate your taxes, penalties, and interest, and then make an offer to bring your tax affairs up to date.
But that those 90 days you mentioned, are they need to be within the 31st of January, or you file those and then you get the 90 days?
90 days start from the day you notify HMRC that you have the intention to make a voluntary disclosure, and the 90 days start from that day.
Okay, that's actually an amazing offer, to be honest. So yeah, so we are done with the portion of the news, right?
Yes.
Thank you for that. So let's move on to what you can do to legally, obviously, reduce your tax obligations. What can an investor do to pay less tax?
Yes, certainly in UK there are many options available. As individual circumstances may vary, so I'd recommend each individual investor to take personal advice looking at your portfolio and the circumstances. But like I will highlight some of the key generic areas everyone can consider. Definitely, you should utilize your tax-free allowance. Currently, for the previous tax year, we had 12,300 capital gains tax allowance, and the next year it will be reduced to 6,000. So definitely, you should utilize your allowances. Similarly, if you are married, you have the spouse partner tax-free allowance, so you can transfer some of your asset tax-free to your partner to take advantage of their spouse allowances. You can also look into
when you
harvesting.
say transfer some of the let's say I'm the crypto investor in my house and my husband isn't, which is true, by the way.
Yes.
So how would I go about that? Do I do a donation for him? How does that work?
So like you can gift it. So any crypto asset you transferred between your married partner, it will be transferred at your cost basis. So you, for example, you won't pay any capital gain or loss. So you will say, for example, you bought that asset for a certain amount of money. The same cost you will be transferred to your spouse, and then the spouse can sell it at the market value. Any value appreciation from your cost, it will be part of her tax-free allowance. And also, like if she is within the lower tax band, she can also take advantage of the 10% capital gains rate as well. So that's definitely a useful tool.
So it basically doubles the tax
the allowance. Yeah.
Okay, thank you.
And another very common element the crypto investor can use is loss harvesting. So the way the loss harvesting work, if you have capital gain from some asset, you can look at other portfolio in your other token in your asset. If any of them you bought it at a very high cost and you can sell it at a loss at this point, and then later on you feel like you can buy it after 30 days because the watch sales rules not applicable for crypto asset. So you can harvest these losses to offset again your gain so that you can minimize your overall loss for each tax year. So you can do it the other way around as well. So if you have huge losses from previous tax years, you could realize some of the gain you may sitting on with some of the asset, and then you can offset these gains again your previous losses, and that way you will not pay any taxes.
That's a very useful tool, and a shameless plug here. If you use CoinTracking, we have a report for that will show you exactly where you can find those losses that you can.
The CoinTracking report is very useful in terms of doing the loss harvesting. Definitely recommend. And also, like you can do what if analysis within CoinTracking. You can do a dummy transaction to say sell at this price and what would be my tax implication or gain, so that you can even before you do the actual trade, you can do a proactive what if analysis to see what would be the outcome, and then based on that you can ascertain what would be your net tax liabilities.
Exactly. So you can basically try out and see different scenarios before submitting your tax documents to see which one would be most the best for you.
Couple of other item, negligible value claim. This is very useful for crypto asset because crypto values goes up and down, and some coin lose value all of a sudden overnight. So, for example, if you are involved in like project like Luna or FTT, you would have seen one day it is like trading at £10, and the next day it will like zero. In UK, we have something called negligible value claim. If any of the asset you purchase, subsequently the value gone to a negligible value, you can realize these losses as if you sold this asset at a lower price and then realize this loss to offset again your gain. And not only you can offset of a current year loss, you can even carry back to the previous year's gain as well. So definitely this is a very useful tool. I would recommend to speak to
especially with the
advisor who
crypto.
can advise you on how to take advantage of this mechanism.
Is there a limit for that? Is that like, is there an
No,
amount
so
or?
there are certain conditions provided, like you meet all these conditions, you can claim any amount. Yeah.
Okay. Okay, thank you. Anything else?
The other traditional tax planning measures like pension, taking advantage of tax efficient investment scheme like venture capital trust and EIS, even charitable donation. If you take these strategies in an efficient way, definitely you can minimize your tax liability. One of the other main tax uh, strategies, some people looking at changing the residency status. I know like some of the countries have a more favorable tax for
Yes.
crypto. Some of our clients move to territories like Portugal, Dubai, Monaco.
Yes.
So like if you look at your residency status, how you can change, what criteria you need to meet, what criteria you shouldn't be breaking in, and then you can take advantage as well. So sometimes you can even pay zero tax if you plan it properly.
Yeah, but then we would definitely advise you to meet a Shukry or
Yes.
basically talk
So
to a professional.
this is where we differentiate ourselves. Like not only just do the compliance and reporting, we uh, provide you strategies legally how you can minimize your tax liability, so that definitely we can help you out on that.
And that is priceless. Okay, so that's it, right? We can move to the
Yeah,
next
I think
phase, so to speak.
we have covered a lot of topics. I don't want to sort of bombard with other details. So hopefully
Sure.
these
I
like
think
4
this
or
is
5
good.
strategies more than enough to kind of minimize their tax liability.
Yep. Okay, so let's imagine that I come to you as a client and I ask you to lead me step by step through the whole tax preparation process, so to speak. How would you, how do I start? What do I do?
Yeah, so this is where coin tracking is a lifesaver for us. Um, so there are a lot of clients come to us and okay, we've been doing crypto since like 2013 or 17.
Mm-hmm.
I don't have a clue where to start. Like I've used many exchanges, wallets, and so the first thing we advise them is okay, we have to bring all your data into one place. So it's a fantastic tool.
Yes.
Coin tracking help us do this job. So we have the capabilities within coin tracking and a lot of interfaces to various exchanges and cross-chain, blockchain addresses. We can use API and data upload tools to bring all your data into one place. So that would be the first step.
Okay, so just figure out what I have, what I did, where it was, and put it all into some sort of semblance of structure.
Every detail matters, because if you don't bring in some exchanges or wallets, what that means is you will have incorrect data, or your cost basis will be incorrect, and your closing balance will be incorrect, and you will be calculating your taxes incorrectly. So getting all your data in centralized location is very important. So first step is use coin tracking, get your data into one place. And then
Mm-hmm.
the step two, once you have the data, then you need to make sure that you do your classification and adjustments. Because like in crypto, various transaction, depending on the transaction type, we have various tax treatment. So we need to code it
Mm-hmm.
correctly, which items are classified as income, which item classified as capital gain, which item is not taxed, which item we have to take it as zero cost, which item we have to take market value. So all of these items need to be flagged correctly, coded correctly, so that we'll do the correct tax calculation for specific transaction type.
Yes, and UK is pretty elaborate with that, I'd say. You have a lot of rules. It's very precise.
Yes, so like CoinTracking do a fantastic job here as well. They cover most of the uh, almost all the transaction types we need, the classification. So it's make it easier so that rule based calculation can be enabled within CoinTracking. So once we've done the classification, so once we have the classification done, the next step what we do is we do a reconciliation and remediation of the balances. So ideally, we should have taken the closing balances of end of the each tax year. So most of the client wouldn't have done that. Then what we do is we look at the current position and then trying to remediate the balances. If there's any discrepancies or differences, then we will try to rectify them through adjustments. And then as long as the adjustments are reasonable, and then you can argue and your assumption how you arrive at of this data. In crypto, there's so many uh, reason why you could have discrepancy, like the exchanges may be gone bust, they don't keep the record, or like you lost your access. So we need to handle all of these exceptions. This is where it's going to take more time. Look at all those discrepancies. Like if everything is you have the record and you can get all the information correctly and coded correctly, CoinTracking will do a fantastic job of populating the numbers after that, and then we'll take the numbers and then prepare the tax return. If you haven't done all your previous tax filing, then this is where we will advise the client to do a prior period disclosure so that you can get all the previous year's tax affairs up to date. And if everything is ready, then we will do the current year filing, and then we'll prepare the forms together with any other schedules you may have, depending on the circumstances of the clients. They may have property, rental, shares, other items that need to be reported, so that we'll collect everything together and then prepare the final return, and then let our client know what would be the tax, and ask them to approve it. Once they approve it, we'll before even approve it, like we look at the tax optimization strategy. So within CoinTracking, what we do is as I mentioned, we have loss harvesting, negligible value claim, all these what if analysis. We will make sure discuss with the client. Say, okay, yeah, so you have these Luna tokens what you bought, and we can realize some of these losses, and then we'll go through these tax optimization stage. And then once we are happy with all the available strategies are implemented, and also like offsetting losses from previous years, current years, we will do it in a way it's more tax efficient for the client. And then once we've done the tax optimization, then we'll finalize the tax return and let the client know this is a tax liability. And then once the client approves the tax return, we will submit automatically to HMRC, because we are an authorized agent for HMRC for tax filing. And then through our system, we'll submit automatically, and then we'll get an instant confirmation that the tax return been accepted by HMRC. Then we'll confirm the payment details so that client can make the payment on the due date.
And the due date for the payment is still the 31st of January?
31st of January. Even if you submit your tax return early, the tax payment is not due until the 31st January. So it's very useful for client to kind of do the filing early, so that they exactly know how much tax they need to pay. Then they can set aside the fund, and then they can time the market and liquidate their asset in the right time, so that they don't have to kind of trying to sort of liquidate their asset during the January period, where the prices tend to go down because like everyone trying to pay their taxes.
Exactly, yes. What happens if I file wrong? What if there's a problem with my filing? I assume if I do it with you, it's not going to happen, but this is crypto, there's anything.
Yeah, so they generally in UK, there is HMRC charge penalties. Generally, HMRC require you to take reasonable care in terms of managing your tax affairs. When I say reasonable care, what that means is you have to make sure that you keep record, calculate your taxes, take advice from a professional who kind of familiar with that, and then submit your tax return on time and pay the tax on time. If you you have taken a reasonable care, HMRC can only go back up to 4 years in terms of any inaccuracies. And then even if they found out like unintentional inaccuracies, they will not charge you any penalties. So the maximum what they will do is collect your unpaid tax and any interest you due for that period. However, if you didn't file, or if you have a careless behavior, what that means is like you didn't file on time, you didn't keep proper record, you didn't speak to advisor, and then you haven't done your calculation using the proper rules, this could be either considered as failure to penalties for inaccuracies. So essentially, depending if you're careless, HMRC have the powers to charge you minimum 10% to maximum 30% penalties, depending on whether you volunteer or HMRC prompt you. If HMRC prompt you, the severity of the penalty will be much more higher. But like in the serious scenario, HMRC can classify your behavior as deliberate concealment. If that's the case, HMRC get 20 years to investigate your tax affairs. In terms of penalty, it will range from minimum 30% to maximum 200% for deliberate concealment, depending on whether you volunteer or HMRC prompt you.
So that's a very good case for actually filing your taxes, what you're saying.
Yes, exactly. So this is, I've talked about the inaccuracies. Again, there is another category of penalties for failure to notify. So assume that you have crypto, you didn't notify, and then HMRC found out about it, then they can charge you similar penalties for failure to notify as well.
Okay, so yeah, so there's a scale, let's so to speak, of what could happen to you from zero if you were trying at least and doing your best, to a very high amount to when you were just trying not to file anything and trying to pretend that your crypto doesn't exist.
That's right. Yeah.
And now we see that all over the world, the tax authorities are getting better and better, and it's actually seeing everything in the crypto space. So
I think that's where, like, even the voluntary disclosure warning is like a grace period. Generally, they give this kind of warning before they strengthen the penalty regime and then targeting the tax investigation. So you need to take this as a warning, last warning, and then get your prior period tax affairs up to date. And the other thing is, like, crypto is within the money laundering compliance legislation. So what that means is, even if you don't report now, later on, like say, for example, next bull run, if you are making your portfolio 10x and you gain a large amount of gain, all of a sudden, if you're trying to cash out, you will have a question from your bank: where do you get the money? Is your tax affairs up to date? It will be, they will even freeze your account if you can't prove that all your prior period tax affairs are up to date. So you will end up not only losing the access to your money, and plus, like, you will have higher penalties because it will be regarded as a prompted disclosure. Because when you bank have a suspicious activity, they have to do a file the report to the Serious Crime Bureau. So that will become a prompted disclosure, because like now they have the information, they know, okay, large amount of cash is come. Even they don't have to prove that you have done something wrong. Even if you have a suspicion, the banks, accountant, lawyers has to file the report to the Serious Crime Bureau. Otherwise, it will be a criminal offense on them. So that's why, like, you see, like in the news, a lot of people say, okay, I'm trying to cash out my crypto, they freeze my account. So the background is money laundering compliance, because you can't prove that you have your tax affairs up to date, all your transactions are clean, then definitely you're going to have problem. But like in the other way, like if you have a proper record, you have submit all your tax return and your accountant can prove everything is up to date, no money laundering compliance, it's not illegal to trade crypto. So what is illegal is money laundering compliance and tax avoidance.
Exactly. And we have received a warning, a clear warning that things are going to change, and this is your time to get your affairs in order. So, okay. So to sum up, we have some new regulations coming in. Thank you for sharing that with us. We know more or less what to do to diminish the amount of taxes that we need to pay. We have the whole process of doing the taxes. So first you figure out what you have and where it is, and get all your data together. Then you have to categorize it properly. You can use CoinTracking to do that if you have a simpler system. If you have a lot of transactions, a lot of DeFi, a lot of everything, basically, this would be the moment to really go into some sort of crypto tax advisor situation where a professional can lead you through the process from there. Then you can take a look at the optimization part of everything. So take into consideration all the other assets you have, tie it all together, see what you can do to come into the best situation that you can, and then you basically file your taxes, making sure that everything is in order, not just the last year. but also everything else in case you haven't done this before, right?
Yeah. So you
Okay,
recaptured it
thank you.
nicely.
Thank you so much for being with us today. You've been the most help. And we will leave all the contact information for you down below in the description of the video. So in case anybody feels like you're the guy for their taxes, here we are.
Yeah, so we are the CoinTracking UK partners for CoinTracking in UK. So if anyone have any issues, they can reach out anytime.
Okay, thank you so much.
Thank you, Arman. Thank you for having me.
Okay, thanks for being with us today. We have mentioned a full video explaining in detail how crypto taxes work in the UK. We'll link it down in the description, together with a long blog post with everything you need to know on the topic with examples. And if you have any questions, leave them down below, or better yet, join our Discord community. Stay safe, do your taxes, and see you next time.